Hey, welcome, it's the Market Sniper, back with you with some FX charts. Haven't spoken pure FX in a while. Yes, indeed. What are we going to be showing you? We're going to show you the Euro USD chart. We're going to show you cable, that is GBP USD chart. And what are we overall implying in this video? It's our expectation to see dollar weakness unfurling over the next week or two. And overall, we're expecting the possibility and maybe even the probability, that means more likely than not, of stretchy targets being made for the Euro USD and the GBP USD. Let's start with the chart straight away. Bang. Let's go. Euro USD. So, quite a range trade for quite some time. This was, last time around the 113, and down here you're sitting at around the 104.5. That's been a range for quite an extended period, since July of 2023. That's a long time ago, guys. It's a year. And actually, throughout that time, we've had a very well coordinated central banking containment policies. Let's just leave it there. Right the way through from July of last year, 2023, right the way through to July of this year, you were still only at 106. You've been within the range of sub 113 and north of 104.5. And most of it actually being within the range over here. In fact, we can keep drawing lines well below 112, 111 through to 106. So a 500 pip range, the bulk of it, 95% of this price behavior for over an entire year has been a containment area, a containment zone, which is continuing to compress, which is our speciality that we love. Squeezy, that Japanesey. We should also talk about the USD JPY and how the weakness of the dollar is actually continuing to juice the yen, and they're trying to, I think, a little bit unwind some excess carry trade that has yet to already have unwound. So watch out for that one as well. But you can see quite clearly that we're getting lower and lower. That's around 109. That was at 106.6. So we've been compressing, and this is where our favorite setup comes in, a hunt volatility funnel setup. So we've been watching this chart for an extended period. We've been talking about it in the community. You got a little bit of a fake break over here with a pullback in there. And that was almost a final little spell of dollar strength. Since then, you've gone from there to there, and actually you're taking out previous highs along the way, out triggering third high over there. You've also taken out localized highs there and there. And it's our express opinion that there is a reasonable potential output that will see the target of 116.5 being run. That's on our unique HVF draw tool, which is available to all our long-standing community members after a year's good service and learning and getting awesome with the tool. First you draw them, then you have the tools to help you draw them. That's part of how we progress you, because you need to understand the dynamics of what you're doing before you use a tool. It's a bit like we give you the surgeon set of knives after you've completed the degree and done some cutting on rats and squirrels before you get to operate on the humans with the real tools. So the target 116.56, the failure of the setup would be the takeout of the red line over there. You've been squeezing higher here. And I will point out, before everybody rushes out and smashes the buy button on that Euro USD, that you have been squeezing higher quite steeply. This is quite a strong increasing wedge type 2 breakout, possibly a type 3 breakout, and you have done this rising wedge through our first interim target, which is running there. So, you know, there's a possibility. It's actually been fairly strong on the bigger time frames for a while now. We're on the daily. This is a daily setup, by the way, that we're showing you. So literally since quite recently, when you're at around 107s, you've trotted all the way up to 110.8s, and you have just run off first interim. So it's quite potentially feasible that you get a little bit of a pullback at some point. Remember, you don't go up in straight lines. This is not a ripper. I think currencies generally, if you're not involving the great gold, we'll be talking about gold in a minute because this all ends in gold, you want to be careful because we're talking about a colony of lepers who's been relatively weak or strong in an environment where most are broadly weak and losing value. However, they've also been pretty much contained for quite a while. So anytime you get a major move, like we're expecting in dollar, there's going to be a re-rating on a number of things. And it doesn't always, isn't allowed to happen in too disorderly a manner. Remember, the whole first half, and in fact the back half of last year, was all about how dollar was doing just awesome this period, and was, missing the malaise that was affecting China's stock market being down and the reducing growth numbers and Europe being slow and, all the usual nationalistic uber strong stories that now seem to be unwinding. We're saving those up and now they're unwinding in quite an abrupt fashion. So you could get, having already shown the Europe's already got their cuts in and probably not looking to do more. Actually, the market is a discounting mechanism of what's yet to come. And so the question is it a single cut or will it actually be a double cut from the US of A in this marketplace? So watch out for that slight dip back. That is possible. Don't necessarily execute longs right here, but we'll be showing you how and why we actually think there's even better trades than cross-currency and how it all finishes with gold. But the expectation in a reasonable time, I've drawn this quite aggressively with minor pullbacks. This could take the rest of the year to play out and into even next year and still be successful. So it doesn't have to be a ripper. Bear that in mind. Okay, so what else was set up against the dollar? I mean, is this about euro strength? So remember something. On the Western axis, if the dollar is getting a little bit lame and soft, you tend to see a move into euros. It's the most liquid alternative, and it's another way of still being in the West, but not in the dollar. However, there's a grand old lady, that's what it's known as, and that is cable, which is the GBP USD, and it has also a similar structure, which we've drawn. And in some ways, the move on the UK side is even further, I would say, in terms of all-round target. It had a bumpier ride. We did run already. It started running sooner and already made its first interim before the euro got to it. But then we had that spell of strength of dollar, and then we went into carry trade unwind, which has just been weakness for the dollar. So it's the second time now at its first interim. So I would expect it to maybe crack on. So you could actually see reasonable strength in the pound during this period, not to be confused with their current policies. That is seeing Keir Starmer imprison people sharing memes and letting out violent prisoners to ensure that he has spaces in his limited seated prison to ensure custodial sentences for all of these right-wing, frothing at the mouth racists that seem to have suddenly emerged now that they are being overrun. But anyway, let's stay out of the politics for half a second. So I would expect, again, potentially a reaction, but pretty good progress here. The pound might actually, if you're just a pure FX trader, might actually be the one that gets slightly further a little quicker. So we're not over-favoring the euro. We're saying the euro goes up. We're saying the pound goes up. We're saying it's mainly a function of a weak dollar and a little bit of a compensatory bid for the other Western Tier 1 nations. But between the pound and the euro, we'd probably say the great British pound wins out. So a firming currency. The good news for Brits in terms of that is that it might reduce the need for, will make space if you have a strong pound. Let me rather state more accurately, it'll make space for rate cuts as well, which would be which in the housing market would obviously be well appreciated. So if we're having a look at this on a daily time frame, we're looking at the euro GBP, and we're asking, are you going up or down? Actually, the progress has been on the macro, the daily, pretty much skidding into lows. You had a spit of euro strength, which is now pulling back. It's a bit of a tough call to say who's the king of the castle between these two currencies generally. Let's go up to a macro view and give you this one and say, my suspicion is that, still a bit chunky there, let's do it like that. There you go, a bit more normal. That you've had a bit of a very extensive sort of muffin top range here for cable, well, not cable, Euro GBP, the pound versus the euro. This is, of course, euro as the base. So move up actually is euro strength at the expense of pound. A move down would actually be pound strength at the expense of euro. I would say there's a bit of a lean on the 0.84 here, and that this doming out probably says that the GBP, as I've already indicated, might be a winner. You do have a falling wedge here, so you first might. It's not an extreme dominance, high confidence call. You could get first a little bit of an upside move to the wedge, having seen the euro lose ground consistently during this falling wedge. You might see a little bit of a dump before you get smashed down again to roughly the support level. But it's quite possible we actually see some of that support giving up as well. So pound might have a decent time of it as a currency overall, generally. But is that the winner? Well, we also want to highlight and talk about the USD JPY, which has been our fiat trade indicator for risk off for decades. And the great loss of the value in the Japanese yen that has come so abruptly out of a number of structures and setups. This was literally the peak Japanese yen strength. And since then, these have been very rare and interesting moments that have led to extreme upside moves against the yen on a risk everything. So this is the Nvidia, this is the Mag 7, this is the bubble, everything bubble, and there's been a lot of cheap yen borrowed into existence, turned into dollars and invested for higher returns. The reversing of that is potentially awkward and could get brutal. Is it all over, or is there still further to come? And if I'm looking at this, I just want to highlight a couple of things that should be of potential concern for parties, is that you've been grinding your way up and you've been very much bumping hard on the way down. This was proper elevator stories, bringing you back down to 142. Now, the reason I'm showing you that and the reason why there's a blue line at the 142 is this rally, if we were to get a further unwind and get a second downside visit, could end up giving you a head and shoulders, which could then lead to far greater travails for the dollar and bigger fundamentals for the yen, and would point to possibly the fact that there's a much deeper vein of cheap financing that has been yen proxy and needs to be returned. Especially, well, the Japanese have said, oh, we did the wrong thing, we didn't mean to cause the yen trade to unwind, but everything that needed to happen has happened. The US was slowing at the same time, and as a result, their labor market numbers were coming at the same time, at the very moment that Japan was starting to tighten, and that would have focused a few people's minds on the spread that they were making, and has since led to this. So we'll see what happens here. This could, of course, just recover as it did here, but eventually you get marginally lower lows basing out into a bottom. We haven't really had that just yet. We could go up, we could make a rising wedge and crash back down and do a double bottom and base out here, or it could set up an inverted HVF structure and threaten downside. There's not enough information to say whether this is a long-term unwind or whether we've had the worst of it. So we'll be watching this for the footprints in the sand as the pattern and the draw starts to clarify. Remember, straight after a very high volatility event, it's one of the worst times to try read for tracks. It's literally like a bull stampede has gone right through, and now you're trying to track the spur of a lion after a stampede of wildebeest have just stopped through. You need everything to calm down. You need the rains to come. You need everything to come. You need fresh spoor. You need to clean the slate a little bit and see how the lie of the land is after the major panics and stampedes. And this is still quite recent as an event. So where does gold come into all of this? Well, dollar weakness one of the biggest beneficiaries of dollar weakness, apart from the euro and potentially the pound, is in actual fact good old gold, which is the one people don't talk enough about. Generally, I say certain people talk about it all the time. Certain people want to talk about the currencies. This is a breakout. We see gold going higher, particularly on the weak dollar. Don't forget, gold is in a breakout here out of these marginally higher highs. It is actually the strength along the bottom that keeps coming in. Whatever happened to that China stop buying story? Oh dear, Bloomberg was the source. Bloomberg and Reuters. China stop buying. Okay, kids, don't buy any gold. China's not going to pump your bags. Oh, okay. Seems not. seems gold's pretty good at finding its way up. So that's where it is. We've been biasing and saying a squaring up process within the wedge here could in fact see you pop out, and that has happened. New highs gold, new highs gold. Anybody who is truly understanding that we are in a debt-based fiat system collapse, rather than choosing one of the fiats to be king, should be talking about gold more than anything else, should sound like a gold bug. Gold is money. It only pulled back 4.7% on the whole risking off, which is superior to Bitcoin that lost quite a bit, 30% plus. You need to value your downside beta, because it's when you get hit and you need your money, like everybody else, all at the same time, and are a forced seller, how far did you dip? It's much safer to have 85% gold ounces and speculate 15% in a hodl with Bitcoin, because if you get a major crash and you need to make rental checks, you can sell your gold, the drawdown will be small, but you don't want to be forced selling your Bitcoin at the lows, okay? That's how it works. So, but that's not to say the high beta and the upside of Bitcoin is not attractive. It should not dominate your portfolio. Your personality will not cope with the volatility of your wealth swings on many things much bigger than that. Go and see our Dr. John DeMartini interview on volatility of net worth and most people's ability to cope therein. In fact, we have a far detailed series in our content where we talk about exactly that, and you need stability in your financial assets more than you need volatility, which is why we continue to pick fights with the likes of Michael Saylor with his volatility as feature. Not if everyone is a seller at the lows is volatility feature. It doesn't feel like a feature when it spills 80%, 60%, 30%, and other assets that have held your value more resolutely only correct 4 and are actually in a very short time at new highs. So you just had to hang on a bit, and now you can sell your gold at new highs. Again, Bitcoin's still worth having. Crypto's still worth having, because when it's good, it's going to be real good. And you can do what you need to do out of that. But you don't want to be a forced seller. You don't want to be all in. Diversity is financial theory. There's no such story as the fastest horse. There is a stable of horses. If you only have one horse, you're in real trouble when things go wrong. Simple stories. Let's also say, well, what about that gold against the euro and the GBP? Because we're busy standing here telling you that those currencies should go up. What could it be that, the pound and the euro will outperform gold, for example, and that gold will be just a little bit better than the dollar and creep higher, but not surpass the other fiat currencies during this period? And here's my opinion on that. One word answer: I believe no. That is a very clear resistance point, and you may well get a pullback. You're getting one now. It's far from violent. 2,275 euros. That was your previous high up top there. That was around Q1 of this year, by the way. And since then, you've been in a cupping, rounding bottom. Oh, I don't like a rounded bottom. Right in there. And now you are squeezing and pressing up against the ceiling, which you have touched once, twice, and 3 times, with only the most minor of rejections recently, where before you went right the way down and right the way down on the unwind of the Japanese yen carry trade, shock and horror. And then all the way back up. It seems to me like you'll be breaking to the upside. Gold, therefore, against the dollar is probably going to be one of your best trades because dollar is going to be the weakest of the currencies, and gold will probably still outperform the euro by breaking this level and making higher highs. You need to choose your entry. You got a little bit of a pullback now. Leverage trading of long on golds has proven very rewarding for us, and we continue to turn those profits into saving in gold ounces. Pure gold, link below. ITM trading for Americans, link below. Bullion vault, if you only have $20 a month or £50 or whatever the number, save monthly in gold, get the proxy value of it going up, get to a certain size, turn it into a few coins or even a bar later. Those are all links available below. You pay what I pay. In every single one, I've used all those particular points of purchase for precious metals. What about gold versus the pound? Maybe the pound's harder and stronger than the euro. We suggested it might have a chance at being so. How does it look there? Again, I've drawn a rising wedge squeezing up, but you've seen what happened on gold's rising wedge in the dollars scenario. This in of itself again, and I'll just take the draw lines off of my rising wedge. There could be a jab through the rising wedge before it goes to new highs, but standing here looking at this alone, once again, you are in a rounding scenario. Remember this beautiful breakout back here. What a beautiful, that was the $2,000 mark. That now feels a long way ago. You're closer to 3 than you are to 2. Remember we warned you this was coming. We've been talking about gold. You should be saving in gold ounces. Everybody, what's your fiat doing in a bank where you're going to get stolen from? You should be saving. And by the way, that doesn't even require them to close the bank down and take your money. They're stealing from you by proliferating. In America alone, 1 trillion every 100 days is coming out. That is inflation and cutting. They are nicking, they are clipping all your coins virtually in your virtual bank account. Hold something physical, hold it in your hand, real gold, X-ray it, beacon confident, as I am with our suppliers. Own it, and guess what? You come back in 10 years' time, it'll weigh the same. No one's clipped your coin. No one's clipped your coin like in your bank account where the item, the $100 no longer bought what the $100 10 years ago bought. That is the cost of inflation. Please understand that. That looks like a rounded bottom. That looks like gold going higher. And you have uniquely here, 1940 is quite some year for many people, points of interest, but that is the point that you started to lean up against in pounds. So where do I stand? Actually, you're probably looking at your best trade being gold against any fiat, particularly the weakest, currently dollar, a very simple cross, long gold, short the dollar. I get my friends often asking, what about silver? What about silver? The industrial component is not winning out at the moment, generally, and we say stay. The cycle has extended a little bit, but we are starting to see a little bit of performance from silver. So this isn't you can see you're going to get a pullback into the range. Let's go a higher time frame here. You are in a bit of a flag. You're probably going to pull back. This will see silver for a period overperform, but I want to see that level run before I get overweight in silver. So I'm going to stay with gold, even though this is pulling back. You may get benefit. It may pull back all the way to the splitter. It may go all the way to the bottom half. But until it breaks that, I am in a position where I am saying you need to do a little bit more. I already hold quite a bit of silver because of unobtainium. I will stack the gold for now until such time as we get a key break. Then I'll start stacking the silver and even turning some of that gold into silver ounces while we're still at these crazy numbers. Like 85, 86, long run, my anticipation, silver does incredibly well, a multiple of gold, but you want to have the security of that lower downside beta on your team whilst we are still going to have a number of shocks. So there you go. Gold and silver available, Pure Gold. Book a call to get this kind of analysis. Self-study. Learn our 8 fiat method. This is a totally transferable skill. By the time you've finished with us, I can never take it back from you, even if I wanted to. It's in your brain. You have an understanding. You view markets entirely differently. You've learned to trust the technical analysis, and you've put your stop in always tight, always at a key moment where it has a real chance of surviving instead of scalping losses perennially for you. And you understand what to do for yourself in future, that you can be totally self-reliant on making your own technical decisions with the help of a tool developed by someone who's been in and active in the markets for well over 30 years and has been running this YouTube channel since 2009. Help us get to 100,000. We're 7/10 of the way there in, I don't know, 2 decades. Many others are shining far brighter than us on that front, aren't they? Help smack the like button and hit the subscribe. They always tell you not everybody who's watching is subscribed. Go and ensure you get subscribed. Get real news before the news. Euro to overperform dollar. GBP to overperform dollar. Gold to overperform the lot. Silver potentially to overperform all of them for a spell, but gold is the buy potentially. Don't go charging in on the FX trades right now after the first interim target has just been met. You may get a pullback. Understand it's a position trade that could unfold if you're trading the FX variety versions right the way through the rest of this year and into next year. Gold will keep winning out broadly, save in gold ounces. We have all the best resources in the links below, from the bullion vault for those that have small amounts to purchasing rest of the world except Australia and Nigeria from Pure Gold. ITM trading for US people. Okay, and book that chat. Time to maximize your wealth, guys. This is a wealth creating event. There's real opportunities in the destruction of a debt and fiat based system. You can be one of the few that have retained your net worth and actually ramped it at a time of real carnage. This is what I want for you, whether you spend any money, use any of my affiliate links or not. I'm here to try save people from a cartel of central bankers that are hell-bent on impoverishing you at their own benefit, doing it on a grand scale, so that they can own everything and you can own nothing and be happy on their pharmaceutical drugs and UBI that they will enforce you to take. We say no, self-reliance, we say liberty, we say freedom. If you're a fan of that, you fool the algorithm, you leave a comment and you tell us, where's gold going to be on Christmas Day? I want to know from you, where's gold in dollars going to be Christmas Day? Will it make the 2,900/3,000 level? Will it be still on the way there? Christmas Day, the 25th of December, where is gold? Tell us your number. I read and see all the comments. I also delete all the spam, by the way, and I value them. Thank you for your feedback. We'll catch you again soon. Bye for now.